Your credit score is a number, just 3 digits. But right now, those 3 digits are quietly costing you thousands of dollars a year and keeping you trapped in a system most people don't even know how to escape. Let's start with the truth about credit scores that nobody explains clearly. The FICO score, the one used by 90% of top lenders, runs from 300 to 850. Below 580 is poor. 580 to 669 is fair. 670 to 739 is good. 740 and above is where life gets measurably cheaper. Here's exactly what goes into your score. Payment history is the biggest factor, 35%. This is whether you pay on time and how late you've been. Credit utilization is 30%. That's how much of your available credit you're using. Keep it under 30% and ideally under 10%. Length of credit history is 15%. The older your accounts, the better. Credit mix, having different types of accounts, is 10%, and new credit inquiries make up the final 10%. Here's what most people miss. The credit bureaus, Equifax, Experian, and TransUnion, are not government agencies. They're private companies that collect your financial data and sell it. And they make mistakes. Lots of them. A Federal Trade Commission study found that 1 in 5 Americans has an error on their credit report. 1 in 20 has an error significant enough to affect the interest rate they qualify for. That means right now there is a 1 in 20 chance you are paying higher rates on your mortgage, your car loan, your credit cards, because of a mistake that shouldn't even be there. Now let's talk about how people end up trapped in debt, because this is where the system really works against you. The average American household carries over $103,000 in debt. That includes mortgages, car loans, student loans, and credit cards. And it's the credit card debt that does the most damage. The average credit card interest rate in 2024 hit a historic high of over 21%. Think about what that means. If you have $5,000 on a credit card at 21% interest and you only make minimum payments, it will take you over 15 years to pay it off. And you'll pay more than $8,000 in interest alone. This is the debt trap. You fall behind on one bill, your credit score drops, you can't qualify for lower interest rates, your existing rates may increase, and now you're paying even more just to stay afloat. But there's something even more insidious about this cycle. The stress of debt affects decision-making. Studies from Princeton and Harvard found that financial scarcity consumes mental bandwidth. It literally reduces your cognitive capacity. So when you're drowning in debt, you make worse financial decisions, which makes the debt worse. Understanding this cycle is the first step to breaking it. Because once you see the machine clearly, you can find the levers. And there are levers. Here is the actual credit repair blueprint, not the vague advice, the real steps. Step 1. Pull all 3 of your credit reports. You can do this for free at annualcreditreport.com. That's the only official free report site authorized by federal law. Download all 3 reports from Equifax, Experian, and TransUnion because they often have different information. Step 2. Audit every account. Go through each line item. Look for accounts you don't recognize, possible identity theft, or data errors. Look for late payments that weren't actually late. Look for debts that are past the statute of limitations but still being reported. Look for incorrect balances or credit limits. Step 3. Dispute every error in writing. The Fair Credit Reporting Act gives you the legal right to dispute inaccurate information. Send a certified letter to each bureau, not an email, a physical letter with tracking, specifying the exact account, the exact error, and requesting either verification or deletion. The bureau has 30 days to respond. Step 4. Use the goodwill letter strategy for legitimate late payments. If you have 1 or 2 late payments but have otherwise been a good customer, write a letter to the creditor, not the bureau, explaining the circumstances and asking them to remove the late payment as a goodwill gesture. This works more often than people think, especially for isolated incidents. Step 5. Address collection accounts strategically. Not all collection accounts should be paid immediately. Get a pay-for-delete agreement in writing before paying anything. This means the collector agrees to remove the collection from your report once paid. Debt negotiation is one of the most underused tools available to ordinary people. Creditors and collection agencies would rather settle for less than chase you forever, and federal law protects you in these negotiations. First, understand the debt collection timeline. Debts have a statute of limitations, typically 3 to 7 years depending on your state. After that, the debt is time-barred, meaning they can't sue you to collect it. But making even one payment can restart that clock. Know your state's rules before you pay anything on old debt. Second, collection accounts are sold and resold for pennies on the dollar. A debt that started as $2,000 may have been sold to a collection agency for $200. That means they have enormous room to settle. Many collectors will accept 40 to 60 cents on the dollar, and in some cases even less. When you negotiate, always communicate in writing. Never give verbal agreements. Use this language: I will agree to pay X amount as payment in full settlement of this account, contingent on your written agreement to report this account as paid in full and request deletion from all 3 credit bureaus. Get their response in writing before you send a single dollar. Third, if a debt collector violates the Fair Debt Collection Practices Act, which prohibits harassment, false statements, and calls before 8 a.m. or after 9 p.m., you can actually sue them. This is leverage. Use it. Repairing credit is only half the equation. Building new positive credit is the other half. The fastest legitimate way to add positive history is the authorized user strategy. Ask a family member or trusted friend with a long-standing low-balance credit card to add you as an authorized user. Their payment history on that account can appear on your credit report and instantly add years of positive history. You don't even need to use the card. The second method is a secured credit card. You deposit money, typically $200 to $500, and that deposit becomes your credit limit. Use it for one small recurring bill. Set the payment to auto-pay in full every month, and within 6 to 12 months your score will begin climbing. Third, consider a credit builder loan from a credit union or community bank. You make monthly payments, the bank holds the money, and at the end of the term you get the money back, plus a trail of on-time payments on your report. One critical rule: never close old accounts just because you don't use them. Age of credit matters. Keep them open, use them once every few months for a small purchase, and pay them in full. These old accounts are invisible scaffolding holding your score up. The credit system is not designed to explain itself. It's designed to profit from your confusion. But now you know how it works, how to fight the errors, how to negotiate the debt, and how to build the credit that opens doors. You have the blueprint. Start with your free credit report today, one step at a time. If this helped you, subscribe to Credit Fixed. We break down the financial system every single week.